It's really good, folks. Let's talk about Netflix, which was a hot topic yesterday, right? Because because they released their results, which were relatively good, but within their balance sheet, there's something called a provision. So, what is a provision? It's when a company already plans ahead for problems and possible future losses, setting aside part of its cash to be able to absorb these kinds of possible future problems. And that's actually what every good manager should do, right? Always be prepared for the worst, because that way we can make the most of the good times, you could say. So basically, what we have is Netflix taking a big hit with its balance sheet, okay? So I want to show you a bit of these highlights here. So Netflix reported revenue of 11, thank you, 1.51 billion, folks, a growth of 17%. Just think about it. A company the size of Netflix growing 17% year over year. I don't know if you realize what that means. It's hard enough to build a company and grow 10% year after year. Now, when you have a multi-billion dollar company growing 17%, that's an incredible result, folks. Earnings per share came in below expectations. Precisely because of this right here, the operating margin was reported at around 21%, 28%. In other words, a decrease due to this provision for a Brazilian tax litigation that will cost or is already costing $619 million. If it were not for this issue and this provision, the margin would be 31% and earnings per share would be much better and everything would be just fine, right? The company highlighted an interesting point here, something that has been growing a lot, as always. Netflix's effort was to gain more and more subscribers, but now it's about monetizing the subscribers they already have through ads, through engagement, and so on, and this has been gaining traction in their financials. It's cool because it shows a company that not only steps out of its comfort zone, but also seeks out other types of revenue from their own customers. So when we look at a more concise summary, we have this. Netflix showed in the third quarter continued healthy growth with strong revenue increases driven by subscribers, prices, and ads, which indicates that the business model remains good and is working. The only issue that fell short of expectations was due to recurring costs and provisions. About how the Brazilian tax issues and taxation. And everything else, the things we've already been talking about. In other words, basically, it's a company whose financial statements, yes, everything looks very good. And then when we look at someone who simply bought the shares, sat back on the couch, and checked today how things are going, basically, whoever invested $10,000 on January 1st, 2020, look, that turned into $34,300. It's the kind of company that doesn't make much of an effort for its shareholders to make money. In 2021, $20,000. Whoever started in 2022, $18,000. Look how cool that is. Whoever started in 2023 and 2024 made more money than those who started in 2021 and 2022. So let's say this person here bought and sat back on the couch and just now got up to see how much they have. And the same person who did this in 2023 has more money than someone who started in 2021. In other words, they are 3 years ahead of this person because they got in at a more opportune moment. This is the crux of the matter, these opportune moments, which is what makes us hunt, analyze, and look for stocks every day here in our club. When we look, folks, at the current moment, is it interesting to make an entry, or what is our view on Netflix? And it's basically when this last leg from October 2022 to June 2025, a 473% increase. So I ask you, my friends, is there room for a correction or not? Imagine someone who made 400%. They want to realize their profit when things start to get a little uncertain. You don't need to wait for a big problem, but at least take part of that profit. They want to pocket it. It's normal. Investors take profits, okay? And today, which is Thursday, October 23rd, it's showing the possibility of a trend reversal for Netflix shares. Obviously, we need to wait for the week to close, but it's signaling that its shares could drop as much as 25%. Wow, is this problem really going to happen? Is it really going to bring everything down? Everything? That's what we're going to see from now on, but the chart signals are showing it. In other words, if you're thinking about buying Netflix, now is not the time. If you're a more aggressive investor who knows how to profit from a market downturn, this could be a golden opportunity for you. But obviously, when you do this, you need to analyze the risks, make your plan, and invest only the amount of money that makes sense for you. And if you have any questions about how to do this, our team is available to help. All right? That's it, folks. I hope you enjoyed it. This is a little bit about Netflix's earnings report and the trend and direction that it could start to fall by up to 25% from now on. And if you like this video, go ahead and subscribe to our page. Turn on notifications because just like this one, we have several videos here. God bless you all. A hug. Bye-bye.